Good morning and welcome to Stock Market Today. It's Wednesday, November 14th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And you can sign up to receive a free email to follow along with this show. Head over to ChaikinAnalytics.com/today. So U.S. equities were mostly lower in Tuesday's trading, failing to bounce off of Monday's sharp declines. Energy was the big underperformer. On more crude oil weakness, healthcare and consumer staples also trailed. Financials and industrials outperformed on the day. Treasuries were stronger across the curve. The dollar was little changed on the yen, but weaker against the euro and sterling. Gold finished down 20 basis points, and WTI crude settled down 7.1% to its lowest levels since November of 2017, and declining for a 12th consecutive session. So as I said, your outperformers were the fins, the industrials, the utilities, and the REITs. Underperformers, energy, healthcare, staples, and materials. As we get to the desk this morning, futures are pointing to a flattish open and near their best levels of the morning following that inability to sustain an early rally yesterday. Asian markets were mixed overnight. European markets are weaker this morning. Treasuries are unchanged to a bit firmer at the back end of the curve. The dollar is stronger on the major crosses. Gold up 10 basis points and WTI crude up 10 basis points, again, after falling more than 7% yesterday. And as we look at the major market here, the S&P 500, you can see that an early rally attempt was rebuffed below the 200-day moving average and the lower end of the support zone that we've been highlighting around 2750. Resistance zone rather. Support does come into play at the 2680 to 2700 level, which we've marked here. Resistance, 2750 to 2770, and that houses your declining 200-day moving average. And then again up here near 2810, 2815. RSI does remain in bearish ranges. Chaikin money flow turns bullish. The question now is, will it hold? As the market has sold off, Chaikin money flow has turned lower, and we want to see if this is a brief visit to positive territory or if it can be sustained. It's yet to be seen. I think we need to see the market retest this 2700 level, hold there, and begin to build a base to move higher. That would be the scenario that seems most likely here in the near term. Again, for you pattern followers, the potential is there for an inverse head and shoulders. But remember, the pattern is not complete until the neckline breaks. A lot of people might get excited, try to anticipate the breakout. I think that that's a fast way to lose money. If you are trading for the pattern, wait for the break of the neckline to get aggressive on the long side. Our market in a minute, what we're talking about in our note to Chaikin Analytics clients today. Stocks give up early gains to close lower on the day. We chatted on that already. Oil falls for the 12th consecutive session. What's interesting to me is that the energy sector has finally broken down relative to the S&P 500. We'll take a look at that. VIX moves back over 20, and sentiment indicators remain skewed towards fear. So Wednesdays, we look at sentiment. I think that is a bullish setup in the near term, especially if the market can test and hold support at the 2700 level. Sentiment is still skewed bearishly to the point where it actually is becoming a contrarian signal. Futures point to a flat open. Our Chaikin power bars for the major indices, Dow back to even, 4 bulls to 4 bears. S&P 500, 63 bullish stocks, 85 bearish stocks. That index down 20 basis points yesterday. NASDAQ actually bucked the trend a little bit. Was up 9 basis points, 13 bulls to 18 bears, and small caps underperformed again. 193 bullish or very bullish stocks, 478 bearish or very bearish stocks. Bonds downticked a bit in aggregate. According to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks. Major indexes are mixed. Our stock of the day today, Booz Allen Hmlt, ticker symbol BAH, comes to us from the Business Services Industry Group, has a very bullish Chaikin Power Gauge rating due to very strong price volume activity, strong earnings performance, and positive expert activity. Financials are middle of the road, but when we roll up the 20 factors that fall into these 4 main categories, we come out with a very bullish rating. Very bullish stock, strong trend, weak industry group. Market and model are in agreement here. Here's the ribbon at the bottom of the screen, tells us where that power gauge rating is and has been. We're on that very bullish rating and seeing some intense outperformance. This is the type of stock that we talk about when we say, when the market is choppy or trading lower, we want to look for the relative strength. This is exactly what we're talking about. Stock continues to outperform. When the market does find its footing, a name like Booz Allen is likely to be a leader. I mean, look, this stock, despite the market's weakness, is trading near 52-week high. Now, it is overbought, but money flow is bullish. We're above the rising long-term trend line. I think there are two ways that you can play this. I think you buy it on a breakout through these highs here, just above 52. Or you look for some consolidation here just below 52 to work off this overbought reading and then set up a better entry point when it becomes oversold. So two ways to play it here. I like playing breakouts to all-time highs on bullish stocks, but if we do remain choppy and you don't want to front run it, wait for that oversold reading. Our sector tracker now, looking at what's happening in the major sectors over the last 5 days, you can see the defensives are the four that are up over the past 5 days: real estate, utilities, healthcare, and staples. Obviously, we expect to see energy at the bottom of the list given what's happening with crude oil. Energy down 5% over the last 5 days. Communications down nearly 3%. Tech still coming under pressure, down nearly 2.5%. Discretionary financials and industrials are middle of the road, but all negative over the past 5 days. So when we start to think about what we're looking for here, we want to see tech, discretionary, comms move towards the front of the pack as the market finds its footing and begins to advance. The fact that the defensive sectors are still outperforming tells you that we likely need more time for a base to evolve. Does that mean we avoid stocks? No. Remember, since the market broke 28.73, we've been advocating to buy weakness in the leading sectors and industry groups when they become oversold. The thing is, the leading sectors and industry groups right now are the defensives, the low beta sector and industry groups, right? It's hard to make the call to get out of stocks or get into stocks because you have to be right twice. What we'd rather do is rotate with the market, trade what the market is giving us. Right now, the market is telling us that the defensives are outperforming, so that's what we'll skew our long ideas. Our industry in focus today, Telecom Services. Over the past 6 months, this subsector has underperformed the S&P 500 by 50 basis points. So let's call it an inline performer, but the power bar ratio is weak. Sure, it's weak. 10 bearish stocks, 9 bullish stocks. It's currently ranked number 5 of 21 subsectors. It has moved down 2 slots over the past week. Some of the indicative names here, and this had been a strong sector, so this is emerging weakness potentially. Boingo Wireless, ticker symbol Wi-Fi, W-I-F-Y. Iridium Communications, IRDM, and Palo Alto Networks. Let's take a look at Palo Alto here. Stock closed 176.80, down 30 basis points yesterday. Very bearish stock, weak trend, weak industry group. Type of name we're looking at if we're setting up a bearish position. If we own Palo Alto Networks, we have to ask ourselves, why do we own this stock? Very bearish, weak trend, weak industry group. In addition to that, it is intensely underperforming the market. Look at how the intensity of underperformance has increased recently. Market and model are in agreement. Dynamic duo in gear, as we can see with the ribbon at the bottom of the screen, tells us we are on that very bearish rating. And lo and behold, the stock is actually overbought but has bearish money flow below a declining long-term trend line. Now, they do announce earnings in a couple of weeks, but this is the type of name, this is the setup you're looking for if you're looking for bearish entries. You have resistance here at around the $190 to $200 level. Stock is clearly reversed trend, gone from an uptrend to a downtrend. You want to sell rallies in this stock. You do not want to buy weakness. Stock currently overbought with bearish money flow, underperforming the market. I think it sets up well for a bearish trade. Looking at what's trending now, yesterday's S&P 500 movers and shakers. Advanced Auto Parts, bullish stock, reports earnings, street like what they heard, up 10.5%. GE spinning off their Baker Hughes GE energy unit. Market like that, stock up 7.75 yesterday. NVIDIA caught an upgrade from a sell-side analyst research shop that sent that stock higher by over 5%. Don't see any news here in Cabot oil and gas, other than to say natural gas has been doing well, and obviously oil is massively oversold. EIX catches a little bit of a relief rally, up 3.7%. On the loser side of the board, Coty, C-O-T-Y, trades at a 52-week low. That stock down 5.5+%, 5.66 to be exact. Tyson Foods reports earnings. Street didn't like what they heard. That stock down over 5.5%. Halliburton, a very bearish stock in the very weak energy services portion of the market, down 5.5% as their CFO has announced that he is leaving. Generally speaking, markets and investors do not like surprise departures by C-level executives. Think CEO, think CFO, think COO. When that happens, it tends to catch the market by surprise. They sell the stock. DaVita down 5.5% as some sell-side analysts are cutting numbers there. And FTI down about 5%. Don't see a real reason for this sell-off there other than the stock was trading near a 52-week low. Our earnings update now, Tuesday surprises. We talked about Tyson. They actually beat by 25 cents. Market obviously had higher expectations and we're expecting more out of the guidance. That stock did trade lower. Home Depot beats by 24 cents. Stock traded off small, but their results did seem to provide a little bit of relief to the beleaguered home improvement portion of the home builders sector there. Remember, if you're looking at the XHB, it's more than just the builders. Encompasses a lot of the supply chain names as well. So the results were good, although the stock did trade lower. And AMRS missed by $1.50 to lose $1.67 on the quarter. That is a neutrally rated stock, although I did not see much trading there. Reporting before the open this morning, we're going to hear from neutrally rated Macy's, get a further update on the retail sector. After the close, closely watched will be Cisco, CSCO. Their equipment is broadly sold throughout different portions of the economy. Obviously, we want to hear what Cisco has to say for its read-throughs to other areas, not just in tech, but in the economy in general. And NetApp, NTAP, is a bearish stock, which is reporting after the close. Chaikin suggests caution when holding bearish stocks ahead of earnings. So there it is, folks. There's oil down for a 12th consecutive day. Below the 50-day moving average, below the 200-day moving average, both of which are turning lower. Really started to landslide when we broke through this support level at $64. RSI is extremely oversold here, down at 13, lowest level it's been over the past 2 years. But what's interesting to me is that while energy has been underperforming really since May, this is the XLE relative to the SPY, this downtrend started back in the May-June timeframe. It's just now taking out support. So the question is, do we catch an oversold rally out of oil, which lifts the energy stocks, in particular the E&P and services names? And what does that mean? I personally think we are oversold. I don't necessarily think you can go out and press shorts in energy names or in crude oil for that matter. However, rallies in oil and in these stocks should be treated as suspect. This looks like pretty solid resistance back here near $64. I think you can use rallies, oversold rallies in crude that generate oversold rallies in some of the energy stocks to open bearish trades. Sentiment remains bearish. This is the 13-period moving average of the CBOE put-call ratio. We've shown this one for a while just because it does show the level of fear that's in the marketplace. Now, we're no longer above 1.1, but we're still elevated here at 1.08. 1.1 tends to mark capitulation in the market, but regardless, I think it's constructive that sentiment remains as bearish as it does, as the market's able to hold, if the market's able to hold key support levels. If we're able to hold 2,700, the bearish sentiment kind of provides a contrarian data point that the bulls can use to propel the market higher from there. Does it generate the breakout? I don't know. But I think you want to use weakness to support levels to buy bullish and very bullish stocks when they become oversold. And another example of sentiment is the VIX is back above 20, and we're looking for a divergence here. Notice in the beginning of the year, the VIX spiked with the initial sell-off, actually spiked over 30. And then the retest back in the late March, early April timeframe produced a lower reading. We haven't seen that yet. Initial sell-off here in October produced a mid-20s reading for the VIX. The lower low produced a similar reading. What we'd like to see is a retest of these lows that produces a lower high for the VIX that sets up a positive divergence that can send the market higher. I haven't seen it yet. We are on the lookout. I think the long story short is the market is still trying to carve out a base. So that's it for today. Sign up for that email. Get daily stock ideas for free. Follow along with this show. Head over to chaikinanalytics.com. /today. And if you like what you're hearing, help us spread the word. Share our link on social media. We'll talk to you here tomorrow at 9:15.